Where are we in this recovery in China? What are the key drivers for the second half?
Well, I think the second half should be the best part of it because the first quarter, although that 18%, of course, is mind-boggling, when you actually look at it in detail, a lot of the Q&Q data doesn't show such a huge positive news because of, as you rightly pointed out, some containment measures during Chinese New Year. So because we're out of that now, China's future growth for the rest of the year should look better. The only cloud is not so much consumption and services, as you rightly pointed out, a lot of domestic traveling going on. It's more about disposable income. We still see a lack of growth in disposable income, and the labor market continues to be sluggish in that regard, especially basically the non-recorded ones, so whatever is still, migrant workers and so on. So there's still a little bit of slack, but I think the year will end up quite positively, not to the point of creating inflation yet, which is a good news for China, if you ask me. But it does show what the looming power problem is, which is still excess capacity, which has been slightly less of a problem because of huge external demand. But will that external demand continue this year? That is really, for me, the key question for China, both disposable income down the road and external demand.
Okay, so talk a bit about that disposable income then. You see a brighter picture in the second half. Are you seeing data points that are fleshing out this picture for you in terms of the health of households here and that disposable income? And how does that tie into the consumption picture?
Well, the positive I see in the second half is really basically the fact that there's no containment down the road, or at least, if we're lucky with the Indian variant and so on in China, which I think we will, given the cross-border measures they've been taking throughout. But on the disposable income, though, I think the worrisome part, and it's more structural than the second half, Tom, is household debt. We just finished a report on the first quarter data for China's debt overall, and there is a reduction as percentage of GDP, but actually an increase in household debt, even as a percentage of GDP. And given that GDP growth was 18%, you can imagine how fast still today household debt is growing. So my concern about disposable income is really a structural concern.
Okay, interesting. I know you've been doing a deep dive on Huarong as well. It's certainly something that our MLive team investors are focused on as a potential risk for the equity markets. But you say that longer term, Huarong may have a larger impact, and particularly when it comes to Hong Kong. Can you unpack that for us?
Sure. So I think Huarong's story is not so much about a big default that nobody was expecting. First, there was a lot of things to be expected given what happened on the corruption front. It's been 2 years. It's not really a new story. What is new, though, is that differentiation between the onshore market and the offshore market, and the role of keep wells in China's bond issuance offshore, which are basically instruments to make sure that investors still buy those offshore bonds at the same price, even if there is no real collateral in Hong Kong or offshore, basically. And that keep well kind of ensures that the very same level of credit risk, if I may just use very simple terms. So because of the keep well now being totally, in question, and what that might mean in terms of the different type of restructuring offshore than onshore, this will, of course, impact any bond issued under keep well clause offshore. And this is, although it's been coming down, it's about 10%. It does affect financials much more because most of it is financial institutions issuing through with keep wells, as well as some real estate developers. So my take is there will be some repricing, and the offshore market will not look as safe for some as it would have looked before, thanks to the keep well clauses that are no longer as relevant or as trustworthy.
Okay, and Alicia, just switching focus to India, you've downgraded your forecast for growth for that country to 7%. What are the risks to that forecast at this stage?
Well, to be frank, we had 8.6, and we were at the bottom of the consensus for the whole of mid-2020 to a week ago when we downgraded. And the reason was that it was all too good to be true. If you think about India's policies, the whole cyclical, I mean, the whole growth that even the IMF was seeing, like 11%, I mean, things was really cyclical. We couldn't really find any improvement in productivity, any real, actually, even strong demand policies that would suggest that this growth was coming. And I think basically this is why we were at the bottom of it. Now the risk is obvious that these huge containment measures are going to affect both the supply and of course the demand. On the supply side, the risk is that we'll have some kind of stagflation, of course, at a higher growth level than we usually use this term for, so maybe 7%, but that's not so high for India, given that the base effect we have from last year. So yes, stagflation at that high growth level, but still a stagflation for India is coming because the supply is not going to grow. The containment measures are very strict, and this is a big problem down the road. So yes, that explains her downgrade.
Alicia, what are the responses? What can the RBI do? How much window of opportunity do they have? How much dry powder do they still have?
Yeah, good question. I think they should have kept more, but now it's too late. You know, like in the good old times, maybe they could have kind of ensured that by maybe even hinting at higher rates, they would have contained inflation further, but that wasn't the case. So now, yeah, it is. They don't have much room, and frankly, I think they will be under heavy pressure to support the economy. They've been doing that. They've actually been buying, sovereign papers. So the idea that they've been cautious is, I guess, barring the fact that they've been financing the government. And they will have to continue because debt has increased dramatically in India, public debt. So not much room, Tom.